What is up, people? Miles here with Keep the Change, and today we are talking about the most undervalued stock I have ever seen. All I ask is that you like and subscribe, or else a giant spider is going to crawl on you and you're not going to enjoy it. Now, the stock we're talking about today is a Chinese social media app called Momo, and this stock is down 60% since January, so it's extremely undervalued. In my opinion, it's a little too undervalued. The stock is trading at around $14 a share right now, and it has a market cap around $3 billion. And the current PE on this is 7, and the forward PE is also 7. Now, a forward PE around 15 is considered extremely cheap. 7? Oh my god. I mean, this is as cheap as it gets, guys. Now, usually if a stock is trading at this low of a price, it means that it's going to go bankrupt soon. However, with Momo, they have $2 billion in cash, and that's US. So they have $2 billion in cash, and they only have $1 billion in total liabilities, meaning that they could pay off all their liabilities and still have $1 billion left over, which is 1/3 of their entire market cap. It's 1/3 of what the entire company is worth. Now, let's get the elephant out of the room right now. It is a Chinese company. And if you're a newer investor, you might not be too familiar with this. However, a lot of experienced investors don't trust Chinese companies, and for good reason. Let's take an example. Luckin Coffee, which was basically the Starbucks of China. Keep things simple. This company came out, they said, hey, we made this much money. Turns out it was all fraud. It was all a lie, basically. A lot of people think that Momo could be cooking the books. However, I think differently. And here's a couple reasons why. It paid dividends of hundreds of millions in the past 2 years. I have literally seen the money come to my account. It is hard to fake that. On top of that, the management team also plans to buy back $300 million worth of shares. Now, this is a good thing for a couple of reasons. Generally speaking, if a company wants to buy back its own shares, it thinks that the price is a good value. Also, this helps the stock price rise up. Less shares on the market means that the total amount of shares are worth more. And my third reason, which is 2 years ago, Momo, which is a Chinese social media app, actually went and bought Tantan, which is basically a Chinese clone of Tinder. Now, this deal was not light in any terms, as they paid $700 million US in order to acquire this company. So between the dividends, the buybacks, the company acquisitions, I think this company is totally legit. I don't think they're frauding their numbers at all. However, that is a risk when you invest in a Chinese company. It could be a total fraud. I don't think so. However, I'm just going to give you that warning just in case you want to invest in this company yourself or look more into it. Momo itself is an app in China with 113 million active users every month. It's basically a social media app where you can chat with people near you, you can join chat rooms of specific things, or you can watch live streaming. And the majority of Momo's revenue actually comes from live streaming. So basically you can go watch a live stream with somebody, and what you can do is actually donate to them. Now, this is very similar to something like a Twitch donation, right? Except with Momo, you send them a virtual gift. This could be an icon like an airplane, a car. It's a virtual gift. It's meaningless. It doesn't actually do anything. All it does is transfer money from your account to the streamer's account, and Momo takes a fraction of that. So let's say I buy a $5 icon for my favorite streamer to notice me. I send them the icon, whatever. Momo pays the streamer some money for that, and then they also take some money from that. So basically, the bulk of revenue for this company comes from people donating to live streamers on their app. Now, something interesting to note is that Momo actually teams up with talent agencies within China in order to recruit talent for their live streaming. So a lot of their big live streamers actually come from talent agencies, and we'll get more into that later. So we've got Momo, their main app, with over 100 million monthly active users, and then we've got Tantan, which is their side app, their clone of Tinder, as we called it earlier. So Tantan is actually basically a dating app. So it actually got extremely hit hard by the pandemic. People aren't going to want to date as much, so they're not really going to be going on dating apps at that time. And the Momo app itself is actually extremely profitable, bringing in hundreds of millions in profits for them every year. However, Tantan at the moment is unprofitable. So at the end of Q1, back in February, right when the pandemic hit, Tantan had around 4.2 million paying users every month. By the end of Q2, the most recent quarter, which was in June, they only had 3.9 million. Clearly, there was a decrease in the amount of people wanting to pay for dating subscription services. However, as of August, they're now back up to 4.1 million paying users per month. So this just shows that even though the pandemic hit them hard, they are recovering and they're about to be back on a growth track. Now, the share price got absolutely demolished. I mean, destroyed. The stock was trading around $40. Pandemic hit. Obviously, it hit China first, and since all all their operations are pretty much within China, they got hit extremely hard. So the stock crashes to $15 a share, which at these prices, with the amount of cash they have, they're not going bankrupt. They are just so undervalued. It is ridiculous. So let's actually look at how bad some of the numbers are, right? Because this stock went down, what, 60%? Surely the numbers must be terrible. So for the second quarter of 2020, which is basically the months from March to June, Momo's revenue managed to fall 6% year over year and is now at $547 million per quarter. So let me get this straight. A stock that's revenue fell 6% year over year deserves to go down 60%? That is ridiculous, don't you think? Especially when you consider the fact that they are still profitable. So they managed to make $64 million in net income in quarter two. Now, $64 million, it's not a ton of money. However, when you put it into consideration, when you compare it to its market cap, $64 million times 4, let's just do an average here. That's a little over $200 million a year just in profits. So this company makes around $2 billion a year in revenue and $200 million in net income. The company's worth $3 billion. When you add up all these numbers, it makes no sense. This company should be trading at a way higher premium. I mean, you've got to consider the fact that one of my biggest holdings, Visa's revenue fell 17% in quarter two. And the whole argument with Momo is the fact that they were growing, right? In 2019, they were growing revenues massively. So now they're on a decline. That's not a good sign. You don't want to see that in a company ever. However, with a stock like Visa, for some reason, people can forgive it. They say, hey, it's just a bad quarter. They'll get back, right? So let me get this straight. Visa had a much worse quarter, is trading at a much higher premium, but Momo deserves to fall this much? Seems a little harsh, don't you think? However, one of the biggest problems that Momo has faced recently is the fact that they haven't really had good user growth on the platform. For the past 2 years, they've pretty much been stagnant on their main app, Momo, and they've ranged from around 100 million users to 115 million users. However, we did see an increase from quarter one to quarter two. So in quarter one, they had 109 million users. Now they have 113 million users. Clearly, things are picking back up in the right direction. However, the pandemic obviously hurt their business a lot. In terms of the fact that the highest paying people on the Momo app were actually small business owners. So basically, the pandemic hits, a bunch of small business owners get into some trouble financially, social lockdown, social distancing. Obviously, your small business is going to be impacted. So when you have less money, you go on this app and you can't really send as much money to your favorite streamers. On top of that, their live video services are not the only thing that makes them money. They have value-added services as well. And value-added services consist of memberships, so buying a Tantan membership or a Momo membership in order to get cooler features within the app itself. And coop that up with the fact that you can actually send virtual items to your friends as well. It's not only the fact you can send it to streamers, you can send it to people you know or people you want to interact with within the platform. So even though live video services have decreased 16%, value-added services, the memberships and sending your own gifts to friends, have actually increased around 27%. So even though their biggest business segment is being hit for the short term, it is recovering, and on top of that, one of their smaller business segments is slowly coming up as well. Now let's talk about Tantan. We focused on Momo a little bit. Let's talk about Tantan. So Tantan, it's like Tinder, it's dating, so it obviously got hit extremely hard. However, it is making a comeback, and slowly but surely, it'll be on its way up. Now, one of my big problems with Tantan is the fact that it's unprofitable. If we actually look a little deeper into it, Tantan could be profitable tomorrow. If you look at Tantan's costs and expenses, the biggest expenses it has are sales and marketing. Now, obviously, it's a growing brand, it's a growing app. You're going to need sales and marketing in order to push the image, in order to enhance the brand. However, if you just remove all of those sales and marketing costs, Tantan would be profitable today, netting them tens of millions within that income. On top of that, Tantan revenue, the top line, is actually growing at a very decent rate. Tantan's revenue was around 35 million in quarter two of 2019. Now it's around 75 million. So it's actually doubled year over year, even despite the pandemic. On top of that, the losses are slowly narrowing. As the losses slowly narrow and as the top line slowly goes up, well, you're going to have an equation for an amazing growth prospect. You're going to have a lot of profit for this company. And that's the biggest plus I see about this company. It's extremely profitable. Even in a situation like the pandemic where they get extremely hurt on the business side, this is a total turnaround play. Because right now there's going to be some short-term pain and it's hard to stomach that. I can't lie to you. I personally have a position in this company. It is down massively. I'm down almost 40% on my position, or around $1,400, which is a lot of money. Don't get me wrong. I think this is a good turnaround play. You've got a company with with a ton of cash, over $2 billion, almost as much as the company is entirely worth, which you don't see that a lot in stock. You've got a company about to buy back its stock, showing that it's confident and also raising the share price. Cheaply valued. I mean, ridiculously valued. This thing used to trade at a forward P around 20. Now it's around a 7. And last but not least, this company is generating profit like crazy and is about to have its second app generate a bunch of profit for it as well, not only its main one. So there's a lot of reasons to invest in this company. I think you could potentially double your money within 3 years. However, there are a lot of risks. This is a Chinese company. It's very volatile. So if you can't stomach volatility, I would not put your money into this. Of course, as longer term investors, we only care about the next 5 years. I don't care about the next month. I don't care about the next year, the next 2 years. I want to know where this stock's going to be in 5. Let's go to some complaints I have with the stock. One problem I have is that Tinder and Tantan were actually competing in India, and Tantan was kind of holding up overseas. However, as of recently, India went and banned Chinese apps, including Tantan. I'm not a huge fan of that. I wish that they could go overseas more and weren't only in China. Being only in China kind of gives them an advantage in a sort of different way. They only have one market to focus on. They can really hone in and try and get their subscriber growth back and reoccurring. They're already getting their subscriber growth back up, but they can get it even further and monetize them even more. Now, the other gripe I have with this company, the third quarter guidance they had was absolutely dreadful. They basically said revenue is going to be down -16 to -14%. That is not good, okay? That's a really bad sign. However, like I said earlier, Visa's revenue went down 17% and no one seemed to have a problem. Besides, the way I view this 17%, the next quarter is going to be their very bottom. It's going to be the worst quarter in terms of net earnings, in terms of net revenues. And if you can get in close to the bottom, because this is a turnaround play, remember, we'll get into that in a second, then you could potentially double your money within the next 2 to 3 years. And that would be astounding. So I keep talking, it's a turnaround play. It's a turnaround play. What do I mean? Well, basically, Momo saw that the majority of the revenue came from the live video services, and the majority of people sending money to streamers and donations that gave Momo money were small business owners. And those people tend to have the most money. So it's kind of like, they described it like a pyramid, not a pyramid scheme, okay? I'm not on Michael Scott level. The top level, small business owners, richer people, richer class. The middle class, obviously, lower class, okay? Easy to understand. However, since the pandemic hit, this class got hit extremely hard and they're not spending nearly as much money. So what Momo is trying to do is trying to incentivize the bottom 2 layers in order to spend more money. Next quarter, they're going to have a decent dip in revenue at the cost of actually turning the company around and hopefully getting the lower levels to pay more. They're a social media app with a lot of high-paying users who own small businesses. The pandemic hit, that kind of destroyed that business model. They have to turn things around. I understand that as an investor, and that's why I like them focusing on the longer term rather than trying to get me short-term good numbers. And on top of that, they're already sitting on $2 billion in cash, which they have for a rainy day. They are good. They're not going to go bankrupt anytime soon. I'm not worried about this investment going to zero. And the whole point of this video was to show you that this stock is undervalued. The growth in this stock could come back potentially within the next couple of years. However, it could take a while, and I'm not doubting that. So a couple months, potentially the next year, this could be dead money, meaning that the stock doesn't really move. It stays sort of flat. However, in the longer term, I think this has massive potential and is already super undervalued. So if they do end up growing revenues, this thing is going to skyrocket. So I'm extremely excited to hold this stock, even though I am down a massive amount. Yeah, that's basically where I'm at with this company. Let me know what you guys think. I know it's a Chinese company. It seems a little sketchy. I understand that, okay? Trust me. But I appreciate you guys watching, and yeah, thanks for watching. Love you.